So it's not that they can't identify it. I mean, I'm sure at some point they'll figure out what it is. My real concern is the itching and the swelling.
Whoa. I just meant how was work?
Is TMI getting you down?
We cover that and more in today's video.
TMI versus PMI. Which would you rather have?
I don't know. PMI is money.
Okay, out.
TMI is time and a little bit of annoyance, maybe?
Let's say more embarrassment.
Well, if I were giving TMI embarrassment, if you were giving TMI annoyance.
Oh, yeah.
Depends
right.
which side of it you're on, right?
All right, well, let's just say I picked PMI. What in the world is it?
Great question. Let's go there. PMI is private mortgage insurance.
Oh, it's the extra little fee that you pay every month on your mortgage.
Right?
Yeah, I love those.
Just send them all the money. Take it all.
No, I actually remember that because you really have to watch that and factor it in because it makes your mortgage a whole lot more expensive.
Well, it could be. It's like Yeah, it's 0.5% to 1% of the loan amount added in every year.
Right. Yeah, exactly. Because I remember those days. Okay, so tell me this. Why? Like, what is it? Is it legit? Is it just a way that banks stick it to you?
That sounds so mean.
Let's be honest.
It goes to Uncle Scrooge's secret vault.
His McDuckian fortune.
Just stays there. No, it's a insurance to protect lenders in case you as a client take out a mortgage and then you say, I'm not paying this anymore. You lose the house, and then the balance that's left, or that they have to end up selling it for less than what the mortgage is actually worth, like what less than what the mortgage actually has on it still.
Yeah, okay, so that's why if you bring at least 20% down, the bank feels like, okay, they're probably responsible enough to not walk away. We're not going to
20% down
to stick it, which is a lot.
I mean,
okay, so basically it's the lender or the bank protecting themselves in case you walk away. Maybe they're not sticking it to you. That actually does make sense.
I really don't think they are. I think it's smart.
Let's talk about how to get PMI, and more importantly, how to get rid of it.
Okay, so PMI is gotten by not putting down more than 20% on your mortgage.
Or at least, so at least 20%.
Yeah.
Okay, so then, is it something that you have to go shop around for and tell the lender, hey, I've got my PMI? Or is that something that they do on their side of things?
They typically do it. So they make sure it's there because, once again, it's to protect them in case you walk away from the house with a larger mortgage than what they're able to sell it for.
Okay, so they don't get left holding the bag.
Yeah, exactly.
That actually makes sense. Well, okay, so then the better question is, how do you get rid of it?
There's a couple different ways to get rid of it. So first of all is put 20% more down on your loan. That's one way to do it. Also, VA doesn't have the PMI in there. If you're a veteran and you qualify for a VA loan.
That's definitely one of the perks, because I guess the government actually backs up the loan.
Yeah, exactly. And then I would recommend talking to a lender. I know a couple of really good ones. Talking to them about what options are out there for you, for your specific situation as well.
Okay, so it sounds like it might be easier to avoid it to begin with than to actually get rid of it once you have it.
I mean, at some point you could always refinance. Like, say if you have an FHA loan, it doesn't just go away once you hit that 80% loan value ratio. So you would have to refinance to a conventional.
Oh, so once you get to that point, you start over with a refi.
You can.
Yeah, exactly. That way you get rid of the PMI.
Yeah.
Yeah. Okay, that makes sense.
That's another way to do it. So those are some of the ways to get rid of it.
How much is PMI? What are we talking here? Is it super expensive?
It's about 0.5% or 1% of your loan amount per year.
Okay, so the total. So if you have a $200,000 loan, it's going to be 0.5% to 1% of that amount.
Yes. Mm-hmm.
Okay, that makes sense.
Added every year.
Added every year.
That's divided out by the 12 months.
By 12.
Yeah.
I guess my next question would be, is it in any way tax deductible? Because I love me some tax deductions.
That's an awesome question to ask. The tax code does change, and obviously everybody's situation is different. So you definitely want to check in with the tax consultant first. There are ways for it to be tax deductible. It just, you have to make sure you fit the qualifications for it.
Okay. So it's like I always say, when in doubt, claim it.
No, it's nothing like that at all.
What about as a house appreciates over time?
Oh, I'm glad you brought that up.
Like let's say that over 2 or 3 or 4 years, something changes and your house explodes in value. Does that affect it?
It really does. You have to put a lot more work into that process. That's another way to get rid of it. So if you had a conventional loan and the house values go up, as long as you can prove that your loan value is 80% or less, like 78% of the total value of the house, you can put in the request to have them take off the PMI.
Okay, so some people might get lucky and fall in that category.
Yeah, exactly.
Because it's all just 80-20. That doesn't matter how you get there. So if your house value happens to go significantly higher, you might hit that magic number.
Exactly.
That's very nice.
So it's not just you paying it down; it's also the value of your house going up. So if you're working against, they're kind of working for each other against each other. I don't know if that.
No, that makes sense, and that would apply especially to anybody in Atlanta near the Beltline.
Oh my gosh,
because those values have skyrocketed over the past few years.
Way.
Yeah,
There's
Smyrna.
a lot of home values are on the rise.
Yeah,
have been on the rise.
Yeah.
So if you have any questions and maybe you think you're in that category where your home value skyrocketed and you're looking and interested about, redoing your loan a little bit, I have lenders we can talk to. I would love to come and give you a home evaluation and see kind of where it's at. And I'd be happy to help you. Give me a call, a text, or an email.